So what are traditional investments and alternative investments? Investing plays a crucial factor in building your wealth. Stocks, bond, and cash are some examples of traditional investments. Stocks are one of the most popular traditional investments. Stocks are shares of companies that are listed as public. It's like owning a fractional amount of a company. As a shareholder, you will be assuming the risks and rewards of your company. The value of the shares depends on the company's performance. Economic trends affect stocks. Economic growth can lift stock performance, and prices will go downhill during the recession. Bonds are debt securities usually issued by governments and corporations. As a bondholder, you're lending money to the issuer in exchange for regular interest payments and the return on your initial investment at the end of the bond's life when the bond matures. Some bonds are riskier than others. Riskier bonds offer higher yields to attract investors. That's why you should concentrate on bond credits. Bond credits are the measure of the credit risk of a bond. Cash is typically not considered an investment. It's considered an investment only in an interest-bearing account, such as a savings account or a certificate of deposit. If the cash is not generating any interest, it can even lose value sometimes because of inflation. But it is a great investment to get through an emergency like job loss, etc. Financial assets that don't fit into one of the traditional investment categories is known as an alternative investment. They include private equity or venture funding, hedge funds, commodities, derivative contracts, managed futures, real estate, artwork, and antiquities, which are examples of alternative investments. Should you invest in alternative investments? Alternative investment has pros and cons like any other type of investment. They can help you in the diversification of your portfolio. They reduce volatility in a portfolio because they are not linked to the stock market. Some investments will provide you with tax benefits that are not available in traditional investment methods. Like any asset, the return rate on alternative investments might be higher than traditional investments. However, they are much more complicated compared to conventional investments. Bigger return potential comes with higher risk. What are some diversifying opportunities in alternative investment? You should be aware of the frauds and get-rich-quick schemes that lure people with hopes of earning easy money. Concentrate on solid investments that could make you successful. These are some of the investment opportunities to diversify your investment portfolio. Artwork and collectibles. Collectibles are things that are valued more than they are. This is because they are unique or precious or in high demand. The value of things increases proportionally with time. You might have noticed that famous paintings are auctioned for billions of dollars. This is because they are old and precious to possess. Sometimes it is a matter of pride to own such collectibles. If you are searching for the top 10 alternative investment options, you should look into this. This is not just limited to paintings. This includes seals, wine, sports, autographs, and historical artifacts. This investment will bring you happiness and value for your money. NFTs. Non-fungible tokens are progressively gaining popularity as an alternative investment in recent years. NFTs are similar to digital IOUs. IOU is an electronic information voucher that shows the customer about the borrower, lender, loan amount, interest, repayment amount, and repayable debt. This doesn't sound like a genuine currency, but they operate on the same technology that is blockchain. Cryptocurrencies like Bitcoin and Ethereum use the same technology. NFTs and cryptocurrencies have many similarities, such as crypto only exists as unreplicable, cryptographically distinct bits of code that can't be copied or replicated. Each NFT is unique by nature. It has no worth outside of its environment or system. The music royalties. You can still own a song even if you have never written one. There are many online marketplaces where music creators may sell a portion of the rights to their records. Investors can acquire these rights to receive royalties. Many of these sites lets you invest in different types of royalties, like music royalties, TV royalties, book publishing royalties, film royalties, and many more. Crypto. Buying Bitcoin while you can is a popular quote on Money Twitter. Crypto is one of the most profitable investments. This is also considered one of the most unstable investments because the price changes are rapid, but the range in investing of coins guards against the price swings. Diversification of your investment is necessary because when the price of Bitcoin declines dramatically, the worth of many other altcoins such as Ethereum and Litecoin may rise correspondingly. There are benefits to diversifying your Bitcoin holdings. For example, diversification allows the research of various currencies and project types. This will help you enhance profit performance and safeguard investors from financial risk. Diversifying will also lower your chance of experiencing major investment losses. It also gives you the option to trade in various crypto markets. Fine wine. There are few rare vintage wines on earth. The wine market is a thriving market in the world with returns of 11.6% annually. The fine wine industry is one of the coolest and the best alternative investment options. For 3 decades, the fine wine industry has outperformed the S&P 500. Fine wine investors must choose the wines they wish to include in their portfolio. Then they need to locate a location to keep it. Because of these 2 restrictions, more investors found it difficult to think about fine wine's potential position in their portfolio. Whiskey. We just spoke about wine, it's time for whiskey. Whiskey is one of the most popular alcoholic beverages. Investors have recognized the potential of whiskey as an asset. You can choose to invest in a single cask of whiskey or a whiskey fund, but you need to know and understand whiskeys and their investment grade. The worth of a whiskey is determined by its age and not just by taste. Shifting customer preference will bring a downturn in the economy. Every popular whiskey has the risk of losing that popular position. Peer-to-peer lending. Peer-to-peer lending benefits both investors and borrowers. It is an all-time favorite alternative investment. This can be used to obtain loans using the internet for either personal or professional usage. Many investors combine their funds and spread the total. They will lend this to different companies or people as per their preference. This will help you to diversify your investment portfolio. Litigation finance. Litigation financing permits shareholders to benefit through legal claims without going to court. Global companies are the reason why more such opportunities are available to people. Agricultural commodities. Agricultural commodities are another popular type of alternative investment. This is the best option if you want to diversify your investment portfolio with stock commodities. Agriculture-related products are needed for both the economy and society. Because of their importance, agricultural commodities provide a solid alternative investment possibility. Prices remain stable as long as demand and supply are in balance with each other. Agricultural prices typically rise during inflation. This acts as a hedge against stock market declines. The whole American agriculture sector was worth $1.109 trillion in 2019 GDP. The huge scale of this industry makes it a desirable option to investors. You should consider many factors like shifting consumer demand, oversupply, etc. Alternative investments value for diversification. People might not improve their alternative diversification investments if their assets are heavily tied to the market. However, alternative investments are feasible because they are high value and unaffected by market fluctuations. This is called a poor correlation. With low correlation, alternative assets do not need to change their value relative to equities. Therefore, investors can maintain the value of their investment even if their equities start to decline. This is possible by maintaining a variety of low correlation investments. Some investments focus on stability and constant development for a long time. Some let investors accept greater risk in exchange for higher returns. Whatever your risk tolerance may be, a variety of investment options are available to assist investors in diversifying their investment portfolios. You must consider investing in alternatives to build a strong and diverse portfolio. There are hundreds of possibilities to generate sustainable profits in the future. It takes time to understand portfolio diversification by alternative investments. Alternative investments have great advantages for investors. It can help investors diversify their portfolios, minimize the impact of instability, and achieve long-term financial goals independent of market circumstances. However, one should pay attention to the dangers and complexities involved in alternative investment options. What do you think of the alternative investments and their profits? Let us know in the comments below. Thank you so much for watching, and have a great day.